Hi, everyone. Okay, so you want to have a look at what's happening with the markets. There's a few things I want to show you. First of all, stocks bounce back on earnings optimism. Profits is key. Okay, in the dot-com bubble, we didn't have profits, and that was a major problem. What we've now got, I'm going to take you through each of these headlines and show you a few important things that's going on with the markets at the moment and a few free tools as well that I've got. But for now, stocks are bouncing up because it's earnings season in the US and those companies are beating expectations. Not all of them will do it. I don't know which one's not going to do it, but one major player is going to drop at least 20%. I'm not particularly worried about that because that won't drag the rest of the market down. As long as profits are exceeding the expectations of the markets, we're okay. And that's where we are at the moment with it. Okay, so what else? Morgan Stanley stock traders beat Goldman's in record quarter. Profits. Again, it's because the banks are making profits. I happen to be a Goldman Sachs shareholder and a JP Morgan shareholder, so I'm pleased. Absolutely. Look at that. Bank of America bankers top estimates as deal-making return boosts profits. Once again, that word profits. Okay, all of that good for the markets. So what might be negative for the markets? Well, maybe this. UK and China locked in standoff over each other's embassy plans. No. But China is a problem, but the Chinese will come to a sensible realization. The Americans will back down, obviously, behind the scenes, and the Chinese will do the same behind the scenes. The reason for that is I was in China on 9/11, and I was lecturing the next day on the 12th of September at the University of International Business, and every single person there asked me just one simple question. Will what happened in New York limit China's entry or delay China's entry into the World Trade Organization? What does it mean for growth? They are addicted to growth. They're very different to, say, the Indian negotiators, who, quite frankly, more than happy to be poorer longer. The Chinese are addicted to growth, but with low inflation because it's a socialist country. And they've got an element of the bourgeoisie amongst them. That means they will do anything to ensure that growth continues. They'll also do virtually anything to make sure inflation, which could give rise to social problems, doesn't get spiked up. So they'll come to an arrangement. We're not so worried about what's happening there on China. NVIDIA upgraded as HSBC sees AI driving nearly 80% upside. So for all those people who say, well, AI is a bubble